Everyone, welcome back to your weekly market outlook. This is for the 9th of June 2025, second week in the month of June. Let's get started with last week's numbers here and a couple of interesting things to take a look at. Let's take a look at the Aussie GDP numbers first. We did see the GDP shrink a little bit more here, previously from 0.6 to 0.2. This is below the consensus. And also, if we take a look at the comments coming up from the RBA, we are expecting more interest rate cuts from the RBA in Australia for the rest of 2025. I think a little bit more on the aggressive side here in terms of rate cuttings for Australia. Inflation numbers from the Eurozone ticked up a little bit here just before the ECB interest rate decision, but they still went ahead with that interest rate decision there. We did saw that 25 basis points cut from the ECB, and as we mentioned from the previous outlook, this is likely going to be the cut and then pause from the ECB. And that's going to be the scenario that was confirmed by Christine Lagarde, that they would actually wait for the whole tariff impacts into the global economy before making further decisions on interest rate decisions for now. And if we take a look at the labor numbers here, we did see a higher number from the consensus, 139. Consensus was 126 to 130,000. We also got a downward revision from the previous number, which is 170. Then it was revised down to 147,000. Unemployment rate remains stable at 4.2%. So we're not expecting any rush from the FOMC to start adjusting their interest rates at this point in time. Now this week here, a little bit more on the quieter side in terms of the fundamentals here. Obviously, today in Australia, we are looking at King's birthday here. It's really different, isn't it, to talk about it as King's birthday when we used to call it the Queen's birthday for a very long period of time. But yeah, also the European market is also closed for Whit Monday there. So expecting a little bit more on a quieter tone. Just one thing to note here, on the 9th of June, the US and China is actually meeting in London for the second trade talks, following the first one in Geneva. So that's going to be a market moving event. And also today is the deadline for the Trump administration to provide, further supporting evidence to the Supreme Court, whether or not they should reinstate the reciprocal tariff or completely blocked it. Today's the deadline for that submission, so we should get news about that trickling this week as well. CPI numbers from the US, this is currently expected to go up a little bit from 2.3 to 2.5% there. Core CPI also expected to bump up a little bit from 2.8 to 2.9%, so something to watch out for. On Tuesday, PPI on Thursday, on Wednesday, PPI is going to be released on Wednesday. And to wrap the week up, we have the preliminary UM consumer sentiment. And as we know, for this year, ever since February, it has been a market moving headlines here. So this is going to be very important. Now, the forecast here, the consensus here is now at 52.5. But there are several outlets out there with different forecasts, potentially even lower at 52.1. So this one here, it's open to interpretation on how the market is going to react to that, especially in the month of June, where everyone is just either away or just waiting for, July 9th to see what Trump is going to do about tariff, whether he's actually going to implement that. But if you take a look at the so-called trade deals that the US has been announcing, that is all ready, for example, from India, from Japan, we know there's a lot of problem there, and also any other countries out there looking at the current legal standing of the whole reciprocal tariff, as they're just basically waiting for the Supreme Court to whether reinstate it or block it before going with any other deals. So, but yeah, the deadline is it's coming close. That's going to be on the 9th of July. So it'll be very interesting to see. And a lot of people are just going to be on the sideline for the month of June. And that's something that's reflected here on the currency market as well. The Aussie USD, as I said last week, this is the currency that you just completely avoid. We're just basically just stuck at 65 cents, not really going up, not really going down. It's a completely flat market here on the Aussie. The Euro, we talk about a potential retest of 1.15. We saw that, and in fact, we actually did price push up to 1.15, but not really able to cross that barrier there on the 1.15. The RSI is not ticking up. The stochastics, it's really flat. It seems like it's coming off the overbought condition, but we just can't confirm it at this point in time. The sterling, very similar situation here. We're looking for that push up to 1.36. We saw that happen. Then there was a little bit of a liquidity grab coming in at 1.36. One thing to note here, price has been posting a higher high here, but the stochastics and the RSI has started to post a lower low. A lower high, and this would be an early indication of a potential exhaustion in the market. That might be an indication of a bearish divergence. And looking at the current condition here on the sterling, if it doesn't break above 1.36 very quickly this week, then I think there's a potential for this one to correct itself pretty harshly as well. All right. Lastly, we got the dollar Japanese yen. A couple of key ranges to talk about. 146, this was mentioned last week. And I say 146 could potentially be the resistance for the rest of June. And that seems to be the case here at this point in time. The stochastic is pushing up. The RSI is actually flat. It's at about 50 and it's currently pointing down. The whole structure on the dollar yen on the daily time frame still points to further downside here as long as it's trapped below the Ishimoku cloud. We got supports, and that's coming in at 143 and 142. So these are going to be the two final support. If we lose 143 and 142, that will open up further push lower, closer to 141, 140 on the dollar Japanese yen. But again, you can take a look at the movement here. We are getting a lot of choppy movement here ever since the end of May, leading up to early June here. So not really going anywhere in terms of the market movement. There's a lot of choppiness here, and it's a more suitable market for intraday traders rather than swing traders across all the currency majors. So just keep that in mind, and keep an eye out on that potential news on the US as well as China trade negotiations. They're going to meet up today in London. That should happen right about the time when this video is actually going to be published. So just keep an eye out on that. That would be a market moving event. All right, so with that, good luck to your trades, and I'll see you soon.